Okay, okay, original because this week the market is so bad, so I have to watch a little bit more. Okay,
Thank you so much. How are you doing? Are you doing well?
I'm okay.
Thank you
How
so
about
much.
you? Where are you right now?
I'm in the UK. I haven't been back to
Hello?
Thailand for over 2 years, and I hope that the isolation is, unrestricted, so I can go back to Thailand. I hope end of year for holiday.
Oh, okay. So we are New York. I'm New York anyway.
Yeah, nice, very nice in summer, so it couldn't be any better, right?
Mm-hmm.
And would you mind if I share screen with you so that we can see what we like to discuss about today? Can you see my screen now?
Yeah, sure.
Yes,
Mm-hmm.
thank you. My research is about performance management in tech company, including like financial services and also like yourself. I'm trying to understand the performance management in tech and to understand the good practice and how they manage. For the discussion with you today, if I could get some, advice or feedback about my financial um, model when it comes to tech. And please may I ask that, when you are in New York, in the big city, and you found a financial uh, services company, and how that started, and what is the market or the gap that you see in that you should get started with the financial portfolio company in New York.
Oh, okay. Let me close the door first. Okay.
No problem.
So, but I need to reframe your languages. So basically, you're talking about where how I started my business.
Yeah, it's like when you do a bit of a startup in a way many years ago, and when you start like a financial company in New York, I like to understand like how you see the gap in the market and how you think of the business will be, prosperous and for you and what strategy when you start the businesses.
Okay, but I started basically because original way I joined, I worked for bigger company before. So it's not like just I started my own. I worked at my previous company's big company about 15 years. Okay, I worked there 15 years. And then during the crisis, 2008,
Yeah,
I quit the job.
yeah,
So I changed the position. So basically, I just do my own, but it's not just totally alone. It's almost like a franchise, the franchise kind of business. Like it's independent, but I still my license is still with a bigger company. My company original is belongs to AIG.
wow, that's huge.
Yeah, okay, but it's independent run the business.
Yeah.
So, but you do your own business. But my license is with Advisor Group. It's called originally it's called AIG, and later they sell by whatever different company. But I still run my own business.
Yes, and you started because you like to have your own businesses, you want to create your own fortune, and you
Yeah,
want.
I do my own. Okay, where I license my license is a big company even today,
Yeah,
but I have my own business. So basically, of course, I have a supervisor my license.
yeah,
Then because 2009 the market crashed,
yes,
and they also created opportunity. It's always like a bad part, also have a good part.
yes, that's so
And
huge.
then when and that time when I come over, I do master seminar.
Yeah,
Master. I'm talking about $1 million spending. So a lot of people come to the seminar. And every portfolio is a lose money, so it's easy to pick up an apple at that time.
yeah,
Because I'm new, okay, I'm new. And you always can make a story because you don't have older client, just new client.
yes, yes,
Okay, so and then original I use other people's model like Vanguard, BlackRock, and the model, other third party. and then later we created our own investment model. So it's basically our business. It's almost leverage partner with a different company. It's not just
Partnership is a key for your
yeah,
businesses in itself.
yeah. It's a team, and then we of course we leverage different financial because of financial product. It's a lot. It's they have insurance, they have asset management, the private investment, they have a mortgage. It's like a we almost like our office is like a retail, what we call Home Depot or Walmart of the financial industry. So we do everything.
Yes. And when you
Mhm.
start the business, is it come from you want to do something that you best at, or you passionate on what you are doing, or you seeing that working on your own, you can have a freedom to do your life if you like. So, what is the main driver for you to create your own business?
Okay, the main drive is you want to make money even you sleep.
Right. So, it's the financial
Yeah, you
reason.
basically, yeah, you want to, of course, freedom is one of them. You want to accumulate, for example, you don't want to make one sale, you finish the money, so right? You want to growing, even though, if, for example, you from 50 million, 100 million, 200 million,
Yes.
because it's like growing, you basically continue make money if you already have your own investment model and the
Right.
people just add more money coming and also existing client if the portfolio is very well and then the money will double. It's right almost like uh, every year I increase my revenue 25%.
Wow. Since started.
Yeah. You know right now it's the same group people. You don't need too many people, but the revenue just continue growing because your base is bigger and bigger.
Yeah. So as
Mhm.
you asked and how you manage that, and if you don't mind, see on the screen here, June, that we're talking about
Yeah.
finance, right? You might
Mhm.
are familiar with the KPI, the key performance indicator, and in finance is the big thing. When it comes to KPI and what is in your most consideration, we have five KPI here. If you don't mind, which one is the most important? And I will rank number one and then two, three, four, five for these five KPI, please. And what you think the most important?
Most important, I think, is the cash flow.
Yeah,
Because if you have no cash flow, the doesn't matter how big your revenue,
yes,
how big your return, you cannot survive. It's almost like last year. Without the cash flow, the business have to close.
right, right.
And we don't need the second one, of course, is revenue growth. Revenue is the second most important. And for my own business, return, I'm not concerned because you sooner or later, once your revenue is big, your return also invest. And my return is basically is not a big because sooner or later I can sell my book business.
Yeah,
It's not every single year you make money. When your book of business is big, I can sell. Okay. Worker capital because of my husband, we are very strong financial background.
yeah,
Okay, so we not really care about capital. We do have a lot of money.
yeah,
And profit, of course, is very important too. Profit, I think is after after numbers three. Three is a profit.
three is a profit. So
Yeah, the capital maybe is the last one is the capital.
the
Mm-hmm.
working capital, the last one.
Return is four. Yeah. Mm-hmm.
So return is a four. Thank you very much. And
Yeah.
you mentioned about like your husband yourself as well, like managing huge fund in New York, and it must have been
Yeah.
something that very well structured. And the cash flow is the key. And you mentioned that last year wasn't very well, and you might not able to manage some of your businesses. And would you mind like describe as your expertise in many decades here? And how you manage your cash flow, what the process is like based on the big scale of business as you manage millions of dollars there.
Okay, the cash for my business last year, I didn't get affected at all because I'm doing finance. We're the stock market. The stock market make a lot of money last year. So, for example, my husband, the business affect because he's a real estate business. The retail business have no return, no tenant. They didn't pay rent. For me, it's because my business is just need a computers, right? And you just need the knowledge which section you purchase. And my client, because most of my client asset is over $10 million, they didn't factor that much. We only factor people we call K return K level is basically the COVID affect most people is not rich, affect poor people. The rich people of course affect, but they not affect the lifestyle because basically when you have more than 10-20 million dollars, it didn't bother your life that much. Mhm.
In your book, and what's the process is like? Do you have to spend like many days a week to look at your book and see how that gonna go in the next like a quarter, the next quarter, and things like that, and how the cash flow work in financial and portfolio business that you are in, and how much time and pressure intensive when it look into the cash flow, how much time you spend on that and how the process look like.
Like my cash flow, my most expense is of course office expense because it's a fixed, and employee is a fixed. But the big portion is advertisement budget. Excuse me?
Is it advertising is the biggest budget in
Yeah,
your
it's a big
financial portfolio?
portion. Yeah, for me, it's my most expensive one because we do TV channel, and we do all newspaper. We do newspaper, and we do mail. We also do gift. Mail, massive mail. We did a massive mail. Each time we mail the 5,000, and also we give them gift. So when they come, we only need not too many fish. We're talking about we just need to find the rich people, right? So you need a massive mail.
Is how
Hmm.
you manage your marketing is the very rich fund resources to spend on the marketing, right?
Yes, a very heavy
And
marketing.
when you talk about marketing, I mean, about 25% or one in four of the marketer can identify their return on investment on the marketing. And in your like process, would you be able to identify the return on investment when it comes to the big marketing spend that you are doing for your financial businesses?
Oh, I think so because we receive phone call. When we
Right.
call them even though we maybe only get a 5 new client, and that will be enough because I'm talking about our client it have money. So that's the most important. For example, if I spend $10, okay, I maybe get $2 back will be okay because we accumulate. You're talking about maybe you get one client and you spend a lot of. It's not the money; it's also the timing. The employee marketing, which is section is very important. Marketing, what kind of people. When you deal with million dollars people, it's not because we cannot cold call. Can you remember? We cannot call. We don't do call. So what you can do, you can only mail the letter. The letter you mail out or TV, you need to get the people call you. The call is very important.
Yeah. And
Mm.
do you need to some sort of, and the way that you marketing, is it quite simple than other businesses that your model is very simple? If you want to get the long-term customer to pay you millions a year and you spend 10 million and then in 5 years you got return, is that work that simple?
It's not as simple. You know, they most of the people, they only give you small money in the beginning to test, but you cannot wait. You want more money, right? So basically, you have to make sure. I did a lot of Zoom call last year. That's why, yeah, I do Zoom call because we do conference call, and you need to explain them why you let me manage it instead of UBS or Goldman Sachs to manage your money, right? So that's not easy. Basically, because my company's name is not that big, I have to almost like sell myself. It's not like, but of course, I don't want to work for Goldman Sachs because they cut my fee so badly. So, mhm.
Zach or BlackRock or JP Morgan, they are a huge company. And how you see yourself and standing out from this multi-billion US dollar, what the strategy you play in order to compete with the big competitor?
You basically you have to let them know you. I'm partner with JP Morgan, Goldman Sachs. So basically, if they want to manage, they manage the money is okay too. The third party manager, I just need to split with them. But I also can manage for them. So you have more option. And also my approach I sell is myself because I'm very educated. I tell them I'm educated. So I have a master's degree Columbia and I went to Harvard the program. I went to Wharton. Okay, so basically, and also in the same time, you have to tell them, oh, my team, we have a PhD Columbia. So it's not, sometimes it's not enough because the big company, they have the office is fancy. This office is our own office anyway. So, but it's still limited, and you don't want to waste money to marketing. You know, like you can have a giant office, but if you don't need the money, J.P. Morgan, like Goldman Sachs, they are fancy. Is right? Okay. So I did something like that. I rent an office, World Financial Center, but in the end, actually, my client is really not pay too much attention. They're looking for the return. When you're looking for the return, my return, if I use a third-party manager, I find out the return is sometimes you choose the wrong third-party manager, the return is not very good. And because you're not front line, you're not the front line. So our team, we manage it by ourselves. We have our own investment model.
When people say like give you a $10 million, what return rate you thinking about yearly, like 10, 20, and what kind of the average return rate of your client?
Oh yeah, no. Normally our return is about 10 to 15% every
Right.
year. Hmm.
Oh,
We
fantastic.
control we control mostly the risk level.
Yeah, that's very nice. And I'm just curious that your business is like working with a big bank and partnership and all of this. And when you started it, unless you come from, either maybe family also back and everything is in place. And are you coming like a small startup at the time you start? You need to you need to get money from venture capital and present them your business model, or you just bootstrap and fund everything yourself when you start the business at the first place?
Oh, actually, I started because I worked for the bigger company before, so already have a client base. Our business is leveraged because my husband is a trust attorney.
Right, right.
Yeah, we only deal with it. Before you come over, we have a client come over. He want to do the trust. We ask, what is your asset? As a less than 5 million, we don't even take you as a client.
Yeah,
Basically, we already have a fundamental. Also, my husband, a family already have some money. So you do have the confidence level. His family more than $100 million level already.
yeah.
So the community maybe already know that, some of that, you know. So it's easier to deal with similar level people.
Yeah. So in that
Mm.
case,
It's not a pure like a start in the beginning. It's very difficult in the beginning.
So in that case, the money is not quite a concern for your company, right? Because you have quite a big cash base, and it wasn't just like month on month. You have to worry about cash flow now
Yes.
and then. So in that case, when it comes to financial challenges in your business or the company in your sector, what are the top five financial challenges that would wake you up at night, if you like? And we have example here. You of course can add something new if you like. Are you thinking cash flow? Are you thinking IT literacy or any automation and AI? And
Oh
so
yeah, okay. So basically, you're talking about my company, like my whole software is all come from my major company. I don't need to spend artificial intelligence. It's okay. There's the company provided everything already. Yeah, cybersecurity, we don't have a problem. The new tool, we don't need. The only problem is hiring, return talent. Yeah, this is the, hello, I cannot hear you well.
sorry. So you think the hiring is the big challenge for you running the business day
Yes,
by day, right?
yes.
And I have
Mhm.
heard one thing. Actually, I have learned a lot about the motivation, intrinsic and extrinsic motivation. People in New York and the big city and a lot of cash around, big company. What actually motivates these people to work or inspire them to join the company? What you thinking?
Oh, okay. Can you repeat again?
Yeah, it's like hiring and retaining talent is the big part that you concern. And when it comes to hiring talent people or good people to be join your team, what you think motivate them the most, like financial or any external things that they might motivate, what
Okay,
they consider.
okay. So I lost several CPA. Okay, worked for me before. They want to increase salary, but it's not a small increase. When they want to increase, because right now job market is tight. And basically, of course, they more challenge for the payout.
So the
The
financial.
benefit, they don't care. Yeah, the financial is more important. I give them freedom already. So my employee, they right now my employee they work at home right now. Of course, they're very good. The only one is some of them is they always looking for other place. Okay, so it's basically pay is maybe one of them. The second one is the name recognition. Everybody want to work for Goldman Sachs, is right? Yeah, so that's one is the second one. And the name recognition of the big company and also pay is very important. Of course, I'll pay, we don't want to pay too much money for the employee. Um, but the same time, it's not a good quality because, oh, we are talking about the cybersecurity because our is financial industry. We are very, very uh, we need to do fingerprint everything. We cannot hire regular people. We need to check the credit. I do have somebody come over interview. The credit score is lower. We cannot hire this kind of people.
I ask something that I'm very curious, and I actually I like to learn about neurosciences and psychiatrists and things like that. And the researcher from MIT and a great university in US and also in UK, they said that the financial motivation doesn't work. They said that people when they motivate with finance or money tend to work less efficient and lower performance when it comes to cognitive related job. And how do you think about that, like claim or saying? I'm kind of not quite understand, but just to get exactly from your experience that why a big university and actually it's Federal Reserve of the US, they're very interested in this research, and their research show that for any cognitive related job, it appears to be the highest finance motivation tend to give the worst performance. And what do you think about this? It's from Federal Reserve Research, actually.
Okay, I don't understand it very well for the question. Can you repeat?
Yeah, so
Make it simple. We'll make it simple, for example.
make it simple is that the research show that when the company give bigger reward to employee, it seems to be the bigger reward give the worst performance. It's not other way around.
Oh, okay. It depends what kind of reward. You cannot totally use money. Okay. Money is one thing. And the second one, and today, because most of the people join the marketing, we hire the people is young age, millennial or little millennial age, because we don't, I hire the people is a little bit younger because they know the technology. Okay. They need the technology. And also because you cannot totally use salary. Of course, the salary is very important. You need to give them freedom. You cannot just like today is like a boss around. You cannot do boss around. So basically, you have to let them they mind working for the field, and also you need to find the employees' talent. What is the strength? What is the weakness? You try to avoid the weakness to focus more strengths. So if you just totally money reward, I think it's limited. You cannot do that, and so maybe that's the reason. You have to do combination.
That's
Yeah.
very much making sense. And please may I ask you for the model of risk management, which is very heavily involved on financial services. When it comes to risk management, and may I ask you, what is the KPI look like when it comes to risk management, if you like? We have 5 KPI here. What do you
Mm,
think it is the most important one to five, if you don't mind, please?
okay. Chris, can you close the door? Okay, manager risk. Okay. Okay, cost include the risk, cost risk. How risk? Are you talking about the my business risk levels, right?
Yeah, just what is that
Oh,
in like
my
financial?
business, a financial risk. When you manage the model, I need it because you're talking about my business risk level when I choose the mutual fund, I choose the stock, or it's just my business risk level.
It is like when you manage your company and you have to consider the risk management, if you like. And when you consider the risk management, what are the top challenge or the most important when you consider your businesses overall?
Oh, so basically talking about we like because I told you my business is almost like a franchise. The company take care of the risk assessment. We have a third party to manage it. Our computer, everything. Every 2 years, company have headquarter have somebody to come to my office, verify everything. So the cost, of course, is very high because take money from my payroll. Okay, but the company spend we call master company, parent company spend a lot of money for cybersecurity because we always afraid of break. It's a very heavy cost, and also we use the third party to manage it, but we pay very heavy like money laundering. The policy we need to buy insurance, heavy insurance payment.
And so, what is you consider is the most important KPI?
Okay, I think it's important. It's a solution, speed and effective solution. That's the most important. If you find something, you gotta immediately fix it. Like my company total score is 800. They report it to me every week. If something going wrong, and they will report. And at the same time, we do risk assessment. Okay, so risk assessment, I think maybe risk assessment, the both is very important. We don't care about the cost. It's because we have a special license. When you have trouble, you will lose your license. So it's a speed and very important costing during the risk cost incurred during the risk. We don't really care that much too. Yeah. Mm-hmm.
And this will be the three.
Yeah.
Yeah, fantastic. Thank you very much. So,
Mm-hmm.
and that's very, very useful information here. And when it comes to risk management, would you consider like ethical risk? For example, like many startup, of course, it could be different, and but the company like Wirecard or Enron and Theranos, and they all come to similar pattern of unethical risk um, management. It doesn't seem to be in place. When you manage your business, would you consider the unethical risk in your business as well?
Oh yeah, okay. So talking about why the car some my parent company, they have regulation. We cannot, for example, we cannot sell Bitcoin. When you choose, we have to set the risk level, manage the money. Okay, if a super risk, we cannot place order. And then when I place, like for example, GameStop. Okay, AMC, we cannot even
Exactly.
place. Yeah,
So how come?
when we purchase for the client we have to call parents company. Basically, normally I place order by computer. When it comes to the very high risk level, we cannot purchase by online. We have to call the major company to place the order. The client have to talk to me. What is the reason behind? When you buy or when you sell, we cannot trade Bitcoin at all because my company have their own policy says two risk level, and even my client come over to want to purchase very high risk level, and then we have to talk to sit down make notes in case it's a regulation. This is very very serious for ethic risk management. For if financial is most important, is basically this is the one because related to your license. We talk about the SEC FINA license. So we get a certain level, we don't go for anymore. We just let the client go somewhere else. Don't under my portfolio. Mm-hmm.
Stop. Do you understand it? Some big investors short the GameStop. I'm not sure how many millions they lose as
Yeah,
GameStop.
yeah,
You
yeah, we do because actually, my daughter is participated because the millennia is doing that. But we're talking about Main Street, okay, and the millennium Reddit, okay. So basically, lost million dollars. It's not $1 million, $1 billion. So yeah, we're not involved in that kind of a trade, but we do have a portfolio Reddit holding. We do have GameStop, okay, we do holding, but we holding the total holding is a very small percentage, maybe a 1 or 2%. Okay, so we do holding, but we don't short. Normally, we have a third party give us notice. Time is short, time is long, the stock. Mm-hmm.
GameStop must lose millions overnight. I see it when it was like $16 and now a few hundred. It come 300 at some point, and
Yeah,
it's
yeah, yeah.
crazy.
Sometimes, yeah, we are even purchased some of that. Uh-huh.
That's very interesting. Like, and like nowadays technology moves so fast, and the company like Robinhood and Millennial that they can just buy stock in one click, and they have money in portfolio. And how is this a threat for you to see the platform like Robinhood? And I believe you know very well that the
Yeah, yeah,
Millennial
yeah.
and
We know it. But it's because Robinhood, they basically is for small money.
yeah.
Yeah, small client, the asset is small, okay, maybe only $1,000. For us, we don't handle the client the level.
But if the technology company being a threat of the company like you when you do a much larger deal with your client,
Well, we're talking about it because we also have asset management is right now we have automatic management. It's almost like digital. You talk about related technology because the parent company manage a very large amount, almost $500 billion. So it's not small portfolio. Platform is big. We are big platform. Yeah, so you talk about like we are just independent, like a franchise, but for parent company, they have a lot of assets manager. But I don't. It depends what your client base. Our plan is never going to that kind. We don't have a labor. Okay, we don't have the labor. The cost, it's not worth to our time to talking about. We're talking about you want to make a lot of money, and if you hire a small like an advisor, for example, they make a 40, 50,000. It's not worth it to supervise the people. So it's we are totally talking about the different market.
So it's a
Mhm.
huge, like million, hundred, a million, if not billion businesses that own this market. And as I understand, you don't need many people. You just need a number of good people on your business. It's not about the
Yeah, yeah.
quantity.
It depends. You know, some people's model, it's like they want to have a Walmart, a lot of people.
Yeah.
Some people is talking about the premium. We're talking about my business model is premium. We're talking about the top of people. I'm talking about Asian people. We talking a different area. But you know, both can be successful, but you of course you want to deal with more people, and your margin is very low, okay? But if you have a quantity, it's okay too. But you need to think about the financial industry. They have a lot of regulation, a lot of regulation. It's not easy for like a normal business. So yeah, but maybe in the future, maybe we will do a little bit expanding. You know, go to the lower floor, but your time is always limited, is right?
And I'm very curious that like to get the people who have sort of expertise in finance like yourself. I see many businesses, big or small, uh, especially recently, many business closed down in the UK and I see in the US as well. And big and small companies just dying out, and most of them dying out purely for cash flow. They just run out of the money. And what is your aspect of this company in comparing to your company being successful and able to retain a lot of cash and reserve, and some other companies just go bust? And what the difference and why this company fail and why they don't understand the cash flow management the way that you have done?
Okay, so basically reserve. And when your business is rising, okay, you cannot always think about good future. We always talking about the prepare rainy days, right? You always put the money aside in case something happen. So that's we talking about the cash flow. And a lot of big company or small company, doesn't matter what kind of company, it's always have a trouble is a cash flow. They do have a big asset. They just don't have a cash flow. You have to reduce the debt. You cannot have too much liability, right? You need a positive cash flow. You cannot be negative cash flow. Shorter period of time, it's okay, but the long term, you will bankrupt. I have some client, they very poor cash flow because the restaurant business. We're talking about they have like a $20 million revenue. Okay, so right now they always have a trouble. But the right now government, U.S. government come over save them already. They're flooding the money. U.S. they did a different way. They flooding the money in the restaurant, but the hotel still get a big effect. Hotel business, a lot of people, hotel or a lot of business will die. Okay, maybe the leverage too high leverage. So but of course, if you don't have a leverage, your return will be lower. I'm talking about return of the monies, right? But sometimes you very difficult. You need a balance. I have some client. They own like a 28 hotel. Manhattan. They have a big trouble. But the good part is the bank will not let them default because bank, if they default, bank also have a trouble, right? They just delay the default the process. Government will soon later come out. But if this small potato, maybe the bank will not save them. Government will not save them. I'm talking about the bigger one, it's different. So the small business maybe get hurt. And yeah, you always have to balance every time before you take action.
Balance, and I'm very, very interested in, you can reserve the cash flow, and you have to balance in reserve the cash flow and investing for growth. And you're talking about growth rate, you're talking about reserve, and how you manage this in such a way that you believe is sufficient for you to reserve but allow you to grow. How you manage this to be the balance between the two?
So basically, when my cash flow is short, it's lower. Okay, I try to basically I want to try to reduce the liability. I try to reduce the liability and slow a little bit. And then when I have more cash flow, I expanding the business, also the marketing. I always related to marketing or recruiting. So if I have more cash reserve, for example, I do more marketing, I do more recruiting. When my cash is down, reserve money is lower, I, I tight a little bit.
So
Mm-hmm.
how you manage your cash flow? Is it something like every week you have to look at your book and see,
No,
sorry,
no, no. We have some employee just handle the accounting system. But I can see the balance. The balance when they drop to a certain level, and I know we will maybe slow down a little bit advertisement.
and what the magic number of cash flow? Do you look at the cash flow at 6 months, 12 months, 3 months? What the
No, no,
magic number?
I do cash flow like once a month.
Yeah.
But you get an idea already. You get an idea like 6 months. Most of the time a reserve is a whole year payment already.
Also the whole year payment, okay. It quite
Yeah, even though I have no income come over, nothing come over, I already have 1 year cash flow. So basically, it's that 1 year you should be okay, and I cover all my employee expense, cover all the office expense, advertisement money. So I reserve every 1 year ahead.
so if you want to advise the many businesses that nearly go out of business in this critical time, what's your best advice in terms of financial to say, hey guy, do this, follow my strategy, and I managed a great business here. You should have considered A, B, C, X, Y, Z. What that would be?
Uh, but actually, the most important, you have to verify your business model.
Yeah.
Is if you need to think about your business is dying or is growing because we have a different section. Our mortgage business is boom last year, this year. So sometimes you cannot just have one business, not just like one mortgage, one real estate, one investment. You have to maybe one or two option. Okay, if there's no way all the business dies, it's very difficult, right? So you're looking for your plan. It's you have different section business like a Coda. Do you remember the film? Because they concentrate on one business. I'm talking about the bigger business, small business, the same one. It's the same as investment. You don't put every money technology. You don't put every money the financial. You diversify. Even your business, you will have to figure out which business have a potential. Okay, so if your business you figure out is dying, don't invest too much money in your dying business. Okay, so basically you will have to looking for some business that have a potential and always adjust. You have to adjust your business model.
I heard about this very much, and it's just so. I work with a company like managing 100 million turnover, and the accountant and finance tell me what is the quality of people doing well in this section. They said that the best quality is common sense. You got to have the common sense when it comes to the big decision. Do you agree with that?
Yeah, I agree with that because you live for the society. If you just all the money in the hotel business, like my client, okay, you can tell once they get the peak time, they always come down. Because if you make too much money, just one section, there's no way it's like God just favor yourself, right? They have to balance. Talking about you need to make sure. Do you think a really big horn continue shooting sky, for example? Okay, sooner or later they will come down. They from 62,000 right now 30,000. The way you make enough money like a Tesla, okay, last year Tesla thousand percent return. You think they will continue thousand percent? They sooner or later they come over. And then also there's another thing, never be too greedy.
Yeah. So common
Okay, we
sense
talk about
is
common
what you
sense
need.
because you're too greedy. You make so much fortunes, right? And time maybe you need to balance a little bit. Take some chips, put aside.
Yeah. And when it comes to the process of risk management, which is very, very important in your sector, and I have a bit of like a little flaw here. And would you mind help me to validate that if this flaw is reasonable, is it make sense, is it practical that the tech company or even the finance company can be considered of this simple module like in here, if you don't mind to help me have a quick look, and is that making sense?
Okay, so you have to periodic credit review, update, analysis. Yeah, I think you needed to do that. What I mentioned to you. Sometimes you need a big picture. We're talking about the big picture. Okay, so maybe it's going down, and you have to make sure the business is dying. You don't invest too much money for dying business. Okay, and also you need estimate the risk level because you same one you put too much money in one basket, the risk level is too high. You maybe think about when it's growing your business, you take some chips out to analysis the beginning of the business, right? So you put aside and you have to know which one is more the risk level you're talking about. Uh, you because your money is always limited. It doesn't matter your business is big or small, right? You put the money your priority, okay? And if you're short the money, you just maybe choose one. If you have more money, maybe you test the one or two or three, right? Test the field whether it can bring new revenue. And if you think about the business model, it's good. Like, for example, my asset management, I created the model. We team, of course, not me. Our team created the model. It's very good. We track a lot of money, more than other company already right now, because and you stretch that. You stretch that. You, of course, you do a presentation, whatever. You stretch your priority. And yeah, and also the cost is very important. The cost risk level, and if too risk and spend too much time, maybe the return is not big. You gotta make sure make a small slice of pizza, small slice instead of big. Put a big, slowly get in. Okay, and risk level always risk and also returns. Sometimes it's a balance, but sometimes not. Some risk level is like we work. Do you maybe you know we work? It makes sense because later they become a landlord, right? Okay, so basically they cost they cost it. The reason we charge we work they're dying because they short of cash flow. They take too much real estate. Like our business, my office original, I cut a lot of expense last year. Original, I have California, San Francisco. I have two offices there. Okay. Manhattan, I have a World Financial Center. I have a Midtown Park Avenue. Okay. I have a Miami office. I have New Jersey office. But during the COVID, we cut California, we cut Florida, and We only live in New York. We cut a World Financial Center, so I cut my course. Otherwise, because this is all fixed rate, the fixed expense is like a rental is a fixed, right? But the advertisement is variable. So you got to make sure don't commit too much fixed cost. Employee is not 100% fixed. It's all, of course, key employee is fixed, but other part-time is flexible. So you always have to make sure costs have to be when the market is not good time. Everybody is a better situation. Of course, you have to cut your cost and make sure it's a variable cost that will be more successful. Okay, so all the time you have to compare. Okay, risk and reward. The management is the same one. Also we spend a lot of money for computer, monitor, printer, because right now my employees work at home. Everybody employee have a whole set, my computer system, printer, computer, everything, so they can work at home. We shipping to them paper, everything already. So we adjust the cost. We will save a lot of money for outer state, California. But right now we started open Florida. Slowly. Mm-hmm.
In COVID world, do you think even the COVID have been finished, would you prefer to work in the office together, or you still believe that working from home is as efficient as working together? What you say on that?
Oh yeah, for myself, we work office. My husband is also working his office too. We're separate. So my employee they come over only once a week. Because for us we just need a computer. Okay, if I have a whole set, our computer is a secure computer. Even you steal my computer is no use. Okay, so it's all secure. It's software is all we download. The employee to carry over. The whole printer is our printer. The phone is carry over already. It's our office phone. So of course, sooner or later they have to come to office. It's take too much effort to do the same thing. It's not the same as especially financial. It's different because you need a team spirit. Okay, and for example, Goldman Sachs, BlackRock, they all come to office already. Goldman Sachs is all come back. Yeah. Mm-hmm.
Even JP Morgan and the
It's,
CEO Jamie Dimon, he against it, the working from home. He said that in his job, he need to travel, he need to talk to the real people.
yeah, you need it because you need the shared idea. So sometimes you make a decision whether you want to invest this project, and you need somebody discuss. Of course, we by phone we discuss, but sometimes it's a little bit difficult. Mm-hmm.
Or what your feedback is. And if you don't mind, could I ask you the last question here of the, when it comes to businesses like fail and a reason for them to break the company, even me see some that a lot of companies just break themselves and disappear from the industry. So we're talking about unexpected risk here, and we have four of the key unexpected risks. And if you see all of these, is it something that you consider very important for this risk that we should aware and plan and prioritize to mitigate these risks for that?
Okay, so for me, I always think about uh, if something the too late the decision to drop, you always have to do innovation. Innovation is very important in each business. So basically, like a financial is the same. Your original work for insurance company is the number one insurance company. They didn't do enough innovation. And I follow my CEO jump to today's company. So basically, you have to looking far, far away. You cannot wait the last minute to drop that. So innovation is most important. And the control risk is that everybody have to go through like a comments, right? It's not you have just make sure it's a short term. If you have reserve, it should be okay. In financial, you're talking about financial report ethic. This is for us have big trouble. Financial industry, if you will lose your license. So you definitely cannot even near that. And if you have no license, you have no. A major concern is ethic investment because the client sue you any day, right? Okay. No existing product. Maybe you want to spend a little money for no existing product, okay? Because we are talking about innovations, right? You never know. It's like Robin Hood in the beginning. It's a tiny baby. Today it's become monsters, right?
Yeah,
So the even yeah. Mm-hmm.
get your view on this because quite a few of the participants that I interview, they come from our class. You remember Gabriel? And I also just talked to Ben, who do the coconut water in Thailand and in New York, and he's near you actually. I just talked to him, and it's just so meaningful. And I think some other entrepreneur like Gabriel, and he mentioned that yeah, he failed his last startup, and he said about the passion it come over the reality. He doesn't see that this product it isn't exist, and he pursue it for years and years and invest his time on it, and finally see that product doesn't exist. And I did ask him about that, and we talk and think, and he's not the only one. I think many of entrepreneurs start up put a lot of effort on something that not exists. There's no market, there's no product market fit for that. But it takes them so long time to invest time and money and bootstrapping and things like that, and finally don't get an investment. Do you have any advice on this, that how people able to see this sooner than later, don't spend time and money on something that there is no product market fit, and understand this quicker than conventional company who spend years and years and finally just fail and lost their time and money?
I think I studied the book, Disrupted, the book from the Harvard University, the book. I read the book a couple of years ago.
Yes.
So basically, it's, you just need, sometimes the new product cannot exist if you didn't, but they begin in the tiny one. The bigger company, because it's like a big elephant. It's very difficult shaping, is right? They cannot move. When, especially the CEO, if not a visioneer, when the CEO is not visioneer, they cannot recognize that. So you always make sure your money have to allocate it a small portion. Let some people, new people, come over. Maybe you can see the train is coming, and or maybe you want to think about track the young people. You don't need to hire the people always listen to you. Okay, you have to some like real mind. So you take a turn. Sometimes, I lost a couple good employees in the beginning. I kind of, sad. In a way, they left. So I recruit a new one and find out it's not a bad idea. You never know. So like, for example, last year I hired a girl. It's like a weird girl. But because she saw the picture is different. That's why we invest a lot. GameStop. Like, not like a GameStop. It's like esports, online esports. They all make a lot of money last year. Okay, like Zoom, that kind of product. Zoom last year the returns are super high. So when you do that, you don't looking for traditional investment. You're looking for like a unique. Maybe normal people cannot see. So you always have a new blood for your company. It's okay. And also another one, maybe go back to school all the time. You learn a new idea.
I see, because of I watched the YouTube that one of the British investor in the US, I cannot remember his name, but he very big, managed several billions of US dollar, and he said that the market is gonna crash in the next 3 to 6 months. And I think the 3 and 6 months passed already, and stock market it increased significantly. And I sort of missed that really. I sort of stay conservative and didn't invest. at that time. And I think a year back then, you could double the money if just spend on the FTSE 100 or S&P 500 or
Yeah, when you're talking about the people talking,
yeah,
you have to listen to different idea.
yeah,
You cannot concentrate on one. The name does, okay, for example, that time JP Morgan, I think it's JP Morgan or Goldman Sachs, they said SP 500 will drop to 2800, and actually it's a totally different story. You cannot listen to them. That sometimes, like you have to make sure you have to analysis the market. It's not just listen to other people. You have to analysis. Like I invested very heavy zone last year. Yeah, because the new idea come over esports, Amazon, because it's online makes sense. Cloud technology. So that's why we are investor. We are not just like, of course, we're not go individual company. The Square. The Square, we invest heavily. Square is my husband's tenant. They make a lot of money.
yeah, is your husband client?
No, no, no. They are my husband's tenant.
Okay. Wow.
Yeah, the Manhattan headquarters is my husband's tenant. They take the whole building to rent it, and all the rental building is so bad. But okay, basically he rented to the Square. So even you're looking for tenant, you have to make sure which tenant you rented. We rented to Japanese company of a retail, they're all bankrupt. Okay, so last year, so if your tenant you didn't choose right, you have to basically all the business, every business is related. Doesn't matter financial or restaurant business. A lot of restaurant business make a lot of money because they go ghost kitchen. I don't know whether you know ghost kitchen. It's delivery. It's a delivery. You just back a yard to make a kitchen.
A company like Deliveroo or in the US there is
Yeah, yeah, that kind of. But they don't have like a retail space. They just like a garage as a kitchen. So they're very successful.
yeah, there's a company in the UK we call Deliveroo. That
Yeah, deliver, yeah, and you talk about it so like, not existing product. Sometimes you really become mainstream, but in the beginning they're very quiet, and then suddenly they change the whole industry. Is right, and that's one is so always not just concentrate. You always have to open the opportunity, but actually it's not easy. You have to really learn that. And sometimes you go to school to learn. Mm-hmm.
it's so rich and it's so helpful. I couldn't say enough of thank you to you for me to learn a lot of knowledge and experience that you share with me. Thank you so much, very, very much. I'm really appreciate it. And I make a note a lot of things. And I talked to Ben and just before I have meeting with you, and I appreciate his feedback and he teach me a lot as well of his startup. And I think he's very credible person. I have no doubt why he being very successful as he is today at a very young age, and yourself as well. I mean, I'm so appreciate, and I really hope that in future we might meet in the US some part, and that we looking for I looking forward to have opportunity to meet up again. And thank you so much for your time, June. Your knowledge and expertise and experience is invaluable for my thesis, surely.
Oh, you're welcome. You're welcome. Good luck. Okay. Thank
So
you.
much and take care and hope to see you in the future. Take care,
Okay.
June. Thank you very much. Bye.
Okay. Okay. Bye.